Hey y'all, welcome back. Today we're talking about lucky number 13. We have our powerful patterns I want you guys to learn about. This is probably going to be one of your favorite lessons. I think you're really going to kind of get some light shed on some really great things that I always focus on. And I've covered it on my YouTube, but not to the extent I want to cover it here. I'm really going to get in depth on what I'm looking for, what patterns I like, the pros and cons of all of them. Really in depth. I think you're really going to enjoy it. So today we're going to cover all these things. So first we're going to cover the 3 things a pattern can do and what you're aiming for, right? You always want to have that in your mind. What do I want to get out of this? Risk versus reward, all those things. A pattern can lead to a reversal, a continuation, or a breakout. Now every pattern is going to be different, but again, the most common thing we're looking for is a reversal. You want it to reverse and go back to where you wanted to go, right? You go right into our loading zone, reverses, and comes right back out. The second is a continuation. If any kind of channel play, which we're not going to cover channels today, we already covered that, but any kind of horizontal movement, really, you want to see a continuation, right? It keeps going back and forth, continuing. And then lastly, you want to see a breakout. Sometimes we'll see the pattern going and then kind of consolidate towards the top and go for a breakout. That's the third thing we're looking for, right? Reversal, continuation, breakout. Secondly, we have 6 types of patterns I want to cover. We have 3 triangles. We have our ascending triangle, horizontal triangle, and our descending triangle. Those are some of my favorites. Then we have our wedging up. A wedge up, we look for continuation, and then a wedge down, we look for breakouts. So all 3 of those things, a reversal, continuation, breakout, covered in those 5 alone. And then we're going to look at double bottoms. Double bottoms are a little bit more on a micro scale, but again, even on the 180 day, you will find double bottoms. Third, I want to discuss our plan, how we're going to find the pattern, how we chart, and then our plan to execute. Now, I have a whole entire lesson about execution in the future, a whole entire section on it, but for today, I want to get a brief idea of how I want you to execute and see the trend and patterns unfolding. With no further ado, that's our 3 sections today. Let's get into it. So again, I want to cover the 3 types of patterns we're going to see. First being reversal, continuation, then a breakout. A reversal pattern are extremely important to your foundation. We have covered supports and resistances, we've covered trend lines, we've covered channels. These are all integral to reversals. You're planning on this. There's going to be areas of value, which we've covered. I'm just reviewing this with you. There's areas of value. We call it our loading zone when we're being bullish, which we almost always are in this market type. You want to wait for it to get in your loading zone and it comes out. That's a reversal, right? And then when you get towards your price target or our resistance, we also see it going from bullish to bearish. That's also reversal. Many of our patterns are going to fit within those confines, right? Ascending triangles, horizontal triangles, our double bottoms, all those kinds of things, wedges, you can follow this. You're going to find reversal zones and play off of them, right? They intersect with trend lines and support areas. So again, make sure when I look at these, you're always thinking of where is it going to reverse at. Secondly, our continuation plays. Again, your horizontal channels are probably the best example of that, right? You want to just see and make sure that the patterns that we're following follow a very strict level of continuation. It doesn't go from support to resistance, resistance to support to resistance, and vice versa, right? Just like with our supports and our resistances on horizontal channels and just drawing them within the pattern, right? We want to see the same exact thing. 100% moves, a lot of success, and of course it's never going to be perfect. And again, you want to see continuation throughout the pattern, up, down, up, whatever it is, making the movements being very clear to you. If it's not very evident, do not play on it, right? Make sure it's very evident first. And lastly, your breakouts. A big issue that our newer people have is that they will sell right before a breakout because it kind of stagnates around. Again, I'm going to show you how I try to avoid that. And again, I'm not perfect. I miss plenty of breakouts too. But there's also some patterns like a descending wedge or a falling wedge. Those are made and played as breakouts, right? So even your horizontal channels, your ascending triangles, diagonal, all of them are going to have breakouts. And again, I want you guys to plan for those as well. So that's the first part, all the 3 things we're looking for: reversals, continuation, breakouts, of course. Now let's get into the charts. So here's AEYE. It's a great pick. It's a great play. I want to show you our first pattern, which is an ascending triangle. Now again, we're going to go off this reference to this area right here for you. Let's just make it a little bit bigger. There we go. So let's do our supports and resistances. And again, I'm going to use my trend line tool and then just duplicate because I want to make some channels. So extend right, that's a great support and resistance area. We're then going to duplicate and move this up. And again, you can go all the way left or right. I'm just going to move it to where it is for now. That looks really good right there. That's a great area. Move it up. This is obviously a support and resistance in this area. Let's just do the major ones. And then one up here. So if we're playing this stock during this time period, these are our supports and resistances. We have those planned. That looks good. Of course, you can always extend left all of these. If you want to have just areas like this, that's totally fine to make channels. Again, there's also a lot of validity if you want to do that. A lot of validity and letting them sit here so you can see the length of them, right? If you want to be like, all right, we have, this is the newest support and resistance, that's the oldest, and then you can set precedent off that. Like this one's newer, so it's not as strong as this one over here, of course. So it's up to you. I'm just going to extend left all of them just so we can keep the class consistent. Here we go. Let's do our trend line. So let's draw our trend lines. Again, I moved up here so we can see the whole move. Lesson learned. As we can see, bottom left go all the way right as always. Scroll up. We can see quite a lot of intersection going on. Of course, we played this. It was very evident, so it's a little bit of a cherry pick play here. Let's make this golden. As always, this is going to be our loading zone. Of course, let's redraw this as a channel. Get as many moves as possible. There it is. Great looking channel. It is an 8% one. That area over here, it's about 8%. So again, it's bigger than usual. But again, given the consistency, that's a risk versus reward you have to take and make your own decision on. I liked it a lot. And here is our ascending triangle forming. You may not see it, but again, from here up, we'll make this a little bit thicker. Here up. Here over. And down. So as you can see, we have this ascending triangle, and again, you can make it a little bit longer. So this is our ascending triangle right here. What are the characteristics of an ascending triangle? An ascending triangle is my favorite play, for sure. Firstly, because you have a set resistance area. The price action goes from bullish all the way up to that certain price level, and it reverses immediately and comes right back down. That way we have our reward already planned for us, right? It doesn't matter where it kind of reverses at. You know that your reward will be at X. Whatever that number is, you can take profits 95% to the way there, take it at 100%, whatever you want to do, hold and see if it breaks out, right? But you have a very clear area of where it's going to reverse at. That's great. And number two, which is my favorite, it's a very bullish pattern. When you have higher lows, which I always harp on, you want to always have higher lows, because when you have higher lows consistently, it's showing you that based off supply and demand, which is what the stock market's based off of, people are more willing to buy at a higher price, right? Bulls take over at $1, goes up to $5, comes down to $2, goes up to $5, down to $3, goes up to $5. That's showing consistently people are willing to pay more for this stock, this ticker, this good, this product, whatever it is. That's a fantastic sign of strength, right? As long as it keeps getting higher and higher and there's higher lows, that's a fantastic sign to keep going long. So let's see how it plays out. So here's our ascending triangle, right? We would have probably bought in here thinking that's a channel, would have bought up, would have probably, let it run up, and we see it goes all the way up here. Great. Comes all the way down. As we can see, if we zoom in right here, you can see we have a higher low. From here to here is a higher low, right? So folks have decided in our channel that we would have had drawn over here. See, we would have had this drawn over here, would have kept it, would have said, all right, this is definitely a higher low than over here, would have ran itself back up. And again, you can see it's not perfect. You would have been like, well, we didn't make it all the way up. We would have started dying. Probably would have gotten trailing stop lost out. That's totally fine. But would have come right back down. And again, you can see right here, we have a higher low again. So again, we have a pattern forming. Once, twice, 3 times, 4 times, it's going up, right? And until we see this strong resistance get broken, there's no reason to really shift anything. Again, in the time being, you very well could have probably had a support right here, a resistance right here, and you could have been like, well, we'll just wait for this to break. And of course, when it broke, and again, higher low over here, it broke, it ran up and tapped this again, and came back down. Again, showing that this is a very strong resistance, comes back down into our channel, let it run up again, and then boom, we have our first breakout. And again, once a strong resistance or support is broken, you must reset the trend. This is now irrelevant to us. Again, you can keep it in case you want to have it for historical reasons, but again, this is definitely a whole different play. This is now in a downward channel, as you can see. You scroll this down. So as you can see, it's definitely in a downward channel, so we're not playing it at the moment. But again, this whole area was an ascending triangle. It was a fantastic setup. It's one of my favorites. Let's try the next one. So our next one's APPF, a great looking channel, right? But again, let's see if there's any kind of trend lines going on. So again, our most likely area for first support's right over here in this area, right? Once, twice, three times looks really good. You can then activate it, move it up a little bit, that's okay. It's not ever going to be perfect, you know this by now. Extend to the left, let's duplicate and move up. So again, looks good. You can put one here, but again, that's kind of, too close together. Let's scroll up and see this is definitely an area right here. Duplicate again, move up. Definitely an area right there. Duplicate, move up. And again, right here is fine, right here is fine. I'm gonna do a little bit lower just so I have much higher chance of getting a full move and getting my money out and not hoping for a breakout, right? Because we can see how quickly it drops off at these points. So that's a really good one. 4 lines, that's all you need. You can successfully trade APPF with nothing else than this. But let's check our trend lines. We always got to check our trend lines for sure. Come over here and you can see from the bottom up, oh, we have higher lows across the board. It looks really good. You can start over here and move up and see, cut some action, looks really good. I'm going to keep this one. It looks really good. We can then redraw as a channel and capture all of these moves. So you have once, twice, 3 times. Now again, you're missing this one, and again, it's never going to be perfect, and that's quite all right. So again, make it a channel. There's our loading zone. It looks really, really good. I'd definitely load up there. If this was a trend line play, again, if you're trying to do a horizontal play, again, you can make this your loading zone, make this golden, and of course, you can play off of that as well. But again, just for trend line purposes and patterns, that's what I'm going to use, just like this. It looks really, really good. So again, higher lows across the board, once, twice, 3 times, all higher lows. It looks great. And this is how you'd play it. Let it come in the channel, buy it, which we did. It ran up almost 11%, and now it's back into the loading zone. It's a great play. And again, let's take it a step further. Let's add volume profile, edit, volume P. Add that on there, apply it. And again, we can see off the bat, this is a D. Remember, we covered this a minute ago in our last lesson. A dome shape or a D shape is not bullish or bearish. It comes down to consolidation, trying to break out one direction or another. So again, that looks good. We'll take this line, activate it, bring it up, double click that bad boy, make it our 70% volume line, redraw as a channel up there. Right, so now we have our channel drawn, looking really good. I will then take this line, activate and move it down some, looking good. Right click, redraw as a channel, tap right there, looking good. Double click that, dotted line in red. There you go. So looking really, really good. You have all your volume profile on here. Let's remove that study because we have it all drawn out. We know it's a D. And now we can see our volume area. This is definitely looking like a channel, of course, right? But again, you have higher lows across the board. Your POC is above it, a lot of consolidation. So we know this is very gravitational. Worst case now, it's gravitational. You're going to move up and make at least 4%, right? You're going to come up, hit this area, go back and forth. Easy 4%, but again, with your POC involved, as you can see, you now have another layer of security. Knowing the POC is above you, it'll pull you higher. So APPF, a great ascending triangle. Let's check the next one. OPTT is one of our bigger winners this year. It was a great win. Let's look at it over here. Remember, when drawing trend lines, these trend lines will lead to your patterns, right? You have your resistances, your horizontal lines or diagonal lines. All of your patterns for ascending triangles must come from the same move. Now, of course, you're going to have some times where it's not exactly perfect, and that's okay. But again, with OPTT, I want to emphasize this again. Your big move up and the come down, I'm going to make both trend lines that makes the ascending triangle out of the same move. So I want to double check that with you. Make sure you always do that. So OPTT had a massive move up, and then it came back down. Massive move up, came down, small move, and then blasted off, right? Really good looking thing. You love to see that kind of movement. Let's make some supports and resistances. And again, it's a little bit hard on these kinds of charts. It's a little bit more, sporadic, and that's okay. If you don't like doing these kinds of charts, they're either too small, don't play them. It's okay, there's no pressure. So we have our support there. Definitely one right about there. Definitely one right about here. Definitely one right about this area. As we can see, anywhere in here is a good resistance. I'll put it here. And then again, we had a massive move. I have no idea if it's going to make a support here or not. We're just going to wait and see what happens. So there's your 4 areas. And again, we played it while I was over here. So here's our 4 areas bouncing back and forth. Then again, out of the same move, it always has to be the same move. We have this resistance, and again, you could move it up. Okay, I would be inclined to probably put it here just to get all 4 of these, right? Out of this big fat move here, we have our resistance, and we can draw our trend line from here, anywhere down here, or anywhere down here, right? It has to be one full move. We start down here, this looks good, all the way left and up. As we can see, to make it perfect, it's cutting a little bit close, and so let's double check. We always got to double test our stuff. Go right, move up. We can see a much more perfect line right there. Of course, this would have worked. For sure, you could cut through a little bit, but this is a perfect line. Redraw as a channel. Make it small because this is definitely a good amount of percent. That's 3%. Move it up just a little bit. Make it perfect. Get all the moves you want. That's good right there. We want to buy in this loading zone. So there we go, right? It's an ascending triangle. You can then take your line here, and you can say this is the full move right here and over. So this is our ascending triangle, this whole area over here was the ascending triangle. Or you can even start over here and say this was the whole triangle. It just depends on your preference. But again, set resistance, high or low, hits resistance, high or low, gets close, high or low, hits it, high or low, hits it, and then of course takes off. So again, most of these patterns set you up for really good gains, really good consistency. Even this move right here was 25%. These full moves, like over here, was 163%. So again, these are really good moves, and then you hold for a breakout and you get some good gains on it. I've harped on similar things, but again, I want to bring this up one more time for you. Trading is like a puzzle. Every single ticker is going to be like a puzzle, right? You set your supports, your trend lines, you search if there's a pattern in there, whatever it may be. These are all puzzles. You can choose. Do you want to play a 50-piece puzzle or a 5-piece puzzle? This is definitely a 5-piece puzzle, right? We set our supports, resistances, our trend line made us a pattern, you play off of that. 5 pieces. You can go out and find stocks that are 50-piece pieces, 60-piece puzzles, whatever it is, and you get the same result as these, right? Do not make your life harder, do not make it more difficult to prove a point to nobody, right? A lot of people like to go out and be like, I found this ticker and I figured it out and I got a lot of money. Don't do that, right? You're a 9-to-5 person, you have a job, you have kids, you have adults that need taken care of, kids need taken care of. This is a great example of why we do this, right? It's consistent, it's evident, we scanned properly, which is coming, we charted properly, and then we got gains out of it. Do not overcomplicate this. It's not supposed to be hard. It's supposed to be a consistent side income and a way for you to kind of keep your family afloat. This is a fantastic way of doing that. So again, you can choose how hard you want to make this. Finding good patterns like this makes it much, much easier on you. 5-piece puzzle or 50-piece puzzle, you choose. Our last example for an ascending triangle is CANF. Again, over here, you could have had some plays going on. I want to focus in over here. As we can see, it's a bit more choppy. Okay, it's pretty low volume. It's about 100,000 a day. Again, I wouldn't recommend playing these kinds of stocks to start off with, but again, as somebody who's really good at identifying patterns and stuff, I played this and made a lot of money off it. I'm still playing it to this day. As we can see over here, we have some supports and resistances. We're going to make our first trend line. And again, is it relevant down here? Nope, that's okay. We're going to then activate it and move it up. We definitely have a support area right about here. We got one a little bit higher as well, probably right about there. We got one a little bit higher, probably about there. And we got one right about here. So again, we got about 4 good trend lines. And as we can see, as of recent, it wants to put one in the middle here. You certainly can if you want to. I'm just a bigger fan of less lines, makes it easier. That's a good middle line though. A lot of action bounces off there. So again, on second thought, these 5 lines are perfect. Really good stuff. And again, you can make money off of this stock with nothing else but this if you do it properly. But let's come to the bottom left. Scroll on over and come on up and see we have a bunch of price action as of recently, making it ascending triangle. And again, it does cut through this area. So again, if you'd like to, see this big old candle, come down here and do the same exact thing. So again, it may be more beneficial to do it longer and cut through price action to capture this move over here. You see how we did it over here? We also captured this move. Or you can come over here and do more, a little bit more intense, a little bit more high angled. But again, the principle is the same. I'll probably keep it over here to get the full effect. It's a whole entire channel here. And again, let's make this a channel. Looking good. Good buy-in zone. And again, if you wanted to have a loading zone that's horizontal, if you want to play this without the trend line, that's totally fine. And again, you can see we have our move to the top, all the way to the top, down, up, near the trend line. So again, you can adjust this, up, up. It constantly has been tapping on this resistance. Anytime you bought in down this channel, you made money. And again, I'm not talking about a few percent. We're talking almost close to 20%, almost 5 or 6 times. So even in these kinds of situations where it looks like it's consolidating, you have higher lows across the board. See higher low, higher low, higher low, higher low across the board. Folks are willing to pay more for this, and that shows a bullish tendency. And that is the ascending triangle. Again, I could have found other examples that are a lot more clear, but again, I think it's important for you to understand that if it's not super evident all the time, you can still find them. Because of course, you can always scan for these, and I'll show you. You'll scan for these and find very evident ones. But even hidden inside these channels that are horizontal, you will find your ascending triangles. That leads to breakouts. These are the best play in my opinion. I like them a lot. So again, we have our supports, resistances, volume profile, all those things set. I want to show you what a horizontal triangle can do for you. So again, what we have here is an obvious channel play. This is Amazon. It's a huge cap stock, obviously. Let's find our supports and resistances. I'm going to use the price level for this one. So again, you can go here. That's one. This is definitely one. That's most certainly one. This is one. That's one. Then up here is one. So again, 1, 2, 3, 4, 5, 6 is my max. I don't go more than 6 usually. So again, just like our usual principles, we're going to draw our trend lines from one full move. This is the biggest one. And as you can see, the biggest ones is usually where a lot of the price action is going to stem from. That's more of an obvious thing, but again, until it's said to you, some folks don't understand that. So again, let's go from the top, and we can see there's no straight line over here. There's nothing connected to, so let's bring it on down, and we can see that once, twice, 3 times. So again, it's the exact same thing from our trend line video. It must hit 3 times, and until you can find that, it's not valid. Here on Amazon, we have 3 peaks that are all lower, higher or lower high, lower high, lower high. That way you can connect all 3 of them. That's the top of your horizontal triangle. So we have all 3 higher lows here, higher low, higher low, higher low. And so I'm going to take it, I'm going to make it orange. Again, I like to make my resistances an orange color. From the same move, you can then use this dot right here, this line, this candle, or this candle. Again, this is probably plenty viable to use, but you have to probably cut through some price action to do it. And this is a very easy one to see. We'll go with this all the way right, come up. And we can see we can kind of cut through that wick just a tiny bit. Make this our golden area. Let's make it a little bit smaller. Right, extend this to the right. Extend that to the right so it stays current. And then make this into our loading zone right there. So as we can see, it's a horizontal triangle. And horizontal triangles lead to breakouts. As we've discussed a lot, consolidation or horizontal movement leads to breakouts. Triangles exemplify that. As it's going sideways, it's getting higher lows and lower highs, right? Lower highs as it comes down, higher lows as it goes up. What that's showing you is that not only are bulls willing to buy higher, bears are willing to get more involved and sell lower. So what's going to happen? They're going to clash, they're going to hit at a point. What you're looking for, the horizontal triangle, is to always buy into your loading zone and then hold all the way up. The goal of this is that it's going to break out and make you even more money. You can, in theory, if you want to buy towards the resistances and try and just play the breakout, you certainly can. But again, it's the same exact logic as we've had this whole entire class. We buy low, sell high. But horizontal triangles, you must be prepared to hold at near resistance for a breakout, and I'll show you. So as we can see, Amazon is waiting to break out. And again, you could have bought in here. You would have held for a good 7%. And as you can see, it just drops off. You would have had your stop loss anywhere in here, would have dropped off, and you could have bought back in, but again, it didn't come to your buying area. So again, this is not yet ready to prime to break out yet. We'll show you one, but again, it's getting there. And again, if we go to volume profile, our first big indicator that we use, apply. What's this look like? Looks like a big old D up here for sure. And then of course you can always add this in. What's that? That's our capital P. That's basically a bull flag for volume profile, right? It's saying that this is a very bullish stock. And so again, I would be inclined to hold for a breakout here. And again, you could always come through and you can zoom in a little bit, clean this up a little bit, activate this one, bring it on down. Let's edit the properties. This is why I always do trend lines. It's a little bit easier. Activate this, bring it up. So there is our 70% area value, looking good. And again, you can then bring this one down. Red dashed, dashy red, looking good. And then you can always duplicate this one and bring it down. That's why I like to use the trend line tool, because you can just make charts and stuff look a lot easier. So now you know capital P is really bullish. And again, even up here, it's its own capital D basically. So again, this whole area, this channel is basically consolidating, waiting for a big move and a big breakout. So if you look at it again, that's our play right there. You buy low, you sell into resistance. You can hold if it starts consolidating up here. You hold and wait for a breakout. Really easy horizontal triangle. Let's look at the next one. This is EBR. It's a great stock for this to look for. Again, let's use our trend line tool. I'm a bigger fan than the price level. We're going to then draw our first support. Again, start down low, and you can always move it up. So start down low, extend left, extend right, activate. As we can see, we got a lot of price action right here. That's a really good bottom one. And again, it is relevant given today's price action. It's really relevant right now. Duplicate, move up, obvious resistance right here. But again, I'm going to move up a little bit farther to get all this move right there and that move as well. Duplicate, move up. Looking good right there. Duplicate. Looking good right about there. Duplicate one more time, all the way to the top. So there's our supports and our resistances. It looks really, really good. I usually do trend lines and then volume profile and adjust, so we'll keep doing that. Our horizontal triangle. And again, you come from the top. You can say this is definitely resistance, but again, over here when we were playing it, that's definitely a horizontal triangle right about here. Extend right. This was the bottom of it over here. Extend right. So as we can see, while we were playing it in this range, it came up, came down, and it made a really, really nice triangle. And we played this, we called it. So we have our loading zone right over here. We have our resistance, and again, you would have, at the time, would have drawn it like this, right? But again, given that we were following, we always like to load in the zone, we would have come down, we would have bought in, came up, bought in, and gone off. So again, we can keep it right there. That's a good resistance line. And so what happened? So again, it was going sideways, it came up, came down, you would have bought at support probably, gotten close, came down, would have bought in, and you see horizontal triangles go back and forth, and then they break out. Bada boom, bada bing, right? You always want to find your trend lines. It breaks out and looks really good. And again, you always reset these when you have a major support and resistance broken. Seeing as this major one was not reset, it wasn't broken, it came down. Most of these aren't really that significant, but again, given that this one did break, and it came down and crashed that one, you would now get rid of this. This would get rid of now. And you have to redraw it, right? As of now, it's just a channel play. But again, that's what a horizontal triangle does. It leads to massive breakouts. We had a good 35% run. Really easy to read. So I personally really enjoy ascending triangles because it's bullish, right? Across the board, higher low, higher low, higher low. People are willing to pay more for that same good service or taker every single time, and the resistance stays the same. Bears only have so much power. Horizontal ones are still really good for breakouts, but the issue is, again, with lower highs, it's showing that bears are taking control much earlier than they are with the ascending ones. So again, if you find a really easy to read horizontal triangle like Microsoft is right now, that's great, right? But I always like to prefer bullish setups. The horizontal triangle is much more of a breakout. It's a little bit okay. It's really good when it comes to patterns, but it's just okay. Our next one is a wedge up. So I really enjoy wedges up. They're really good stocks to play off of. And again, we can do our supports and resistances. Might as well do it really quickly. Obvious area of support. Obvious area of resistance anywhere in here. I'll go with right about there. Looking good. Looking good. Really good areas. Again, you can play this alone. No trend lines. And again, most of your patterns are going to come off of big moves. That's what usually makes them. And that's a really good scanning strategy we'll get into. You scan for like 30% moves, watch list that, and then you come back in a few weeks and it's making a channel for you, hack for you. So again, your patterns and your trend lines must be set from the same move. We have this big movement over here. So I'm going to go from the top over here and go right. As we can see, it's getting higher. That looks really good. We'll place it right there once, twice, 3 times. Good resistance line. Then again, you can keep it white. You can make any color you want. I do my resistance as orange. And then from the same move, I can come down here or come over here. I'll emphasize going over here and coming to the right. And as we can see, connecting all 3 of those, they are not equal, right? These are, there you go. These 2 lines are not equal, right? So what's that mean? When your support trend line and your resistance trend line are not equal, but they're still going the same direction, that's called a wedge. This wedge is me a great one to buy off of and to sell off of. The only issue with the wedge is that these do not last forever. They never do. The ascending wedge that we're playing right here has 2 options. Continuation, going back and forth, and then the second option, breakdown. There's a rarity where these will break up if you have like a really good volume spike or really good news, but given the setup, most ascending wedges are going to break down eventually. So again, it's good to play for now, but a ascending wedge definitely needs to have a stop loss. So we connect our 3 bottoms, we have a wedge, it's looking really good. And again, a great way to double test this is whatever line you draw first. So I'll draw my support line first, do all 3 of these, just copy it, right? Redraws a channel. Do these line up? No, you can see there's absolutely no way these lining up. Not well, at least. You can probably come over here and argue. You can argue that's one, but again, you cut through like 4 things, it taps twice, it's not good. So again, you can always redraw these, duplicate them to double check, but that's going to be your wedge, right? You want to buy in low and sell high. And again, you could always make this channel that large, capture, all 4 moves it's had, and we're talking a good 13%. But these ascending wedges will not last forever. An ascending wedge will tap back up here, come down, and break down. But the ascending wedge is a great one to play off of with a good stop loss. Let's check the next one. Next is BMY. Let's check it out. Let's do the whole thing together. So we have our supports and resistances. Just draw our first trend line. You could set it down here, but it's not that relevant. So let's bring this up to where it becomes more relevant. Definitely right about there. You can set it here. You can set it down here. I'm going to set it a little bit higher, just because the price action is so far away that all this is probably just fine. Duplicate and move higher. We definitely got some good price action right in here. That looks really good. Duplicate, move higher. I'm going to set one there just because we have recent price action hitting it and a lot of this action over here and here is stopping right there. So again, it's a little bit closer to this one, but again, it is valid, so let's keep it there. That's definitely one. And again, maybe one more. Anywhere in here is definitely one. Right there, right there, right there. So there's your 5 levels looking really, really good. I would usually draw my trend lines, bottom left all the way up. And again, that's okay. We'll cut through more action though. And we can see we cut through all that, this small spike down. You get 5, 6 really good hits. And again, I'll take 6 really good hits instead of just having 1 no cut through it. That's totally fine. Make that golden, that's going to be our loading zone. So again, now that we have our channel drawn, you can either then draw your resistance line from up here, 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 or here. Now again, I'm going to come over here, and you can see if we do it like this, that also kind of makes a wedge. Again, it's not perfect, so I don't love it. We can then come over here and draw a wedge, and you can see that's also pretty good. It has some cracks, but again, it's definitely not the same as this one. But if you come over here, and you kind of come down, we can see it has 3 really good hits. Looking really good. And it's a very large wedge, right? But again, if I were to duplicate this resistance line and come down, as you can see, it doesn't match at all what the bottom is doing, right? The bottom is showing a different angle, but the same direction. So we have a large scale wedge here. So again, this is a great play. Will it last forever? Nope, but it's an easy 8%. Up and down, up and down. So again, a wedge won't last forever. It is a bullish setup, but again, it will eventually break down on you. I like wedges. I play wedges. I'm not as prone to finding them. They're a little bit harder to find, especially in this market with such green going. But again, if the resistance line and your trend line at the bottom, your loading zone, if they do not match the same angle, but they're headed the same direction and they're really bullish, great play, right? But again, it's not always gonna be the best setup. They do break down eventually, so have a stop loss. Next is the descending triangle. I love descending triangles, but there's one big issue with them. They are not a bullish setup. The problem with the descending triangle is that you have the same lows, it just kind of has a straight line, but you have lower highs. It's the exact opposite of an ascending triangle, which shows that bulls have control. A descending triangle shows that bears have control, right? Folks are selling sooner and sooner and lower. So there's definitely money to be made, and if it does survive and breaks out, the potential is massive. But again, there's a high chance that this will not last forever, and it's going to die on you eventually. So again, great setup, not bullish, but money can be made. Let's check them out. So again, to do the whole entire thing with you, and again, we also do volume profile. That's okay. Let's do our first trend line. Again, anywhere down here is okay. Extend right, extend left, so it stays relevant. I would be, seeing as I can see that it's definitely having lower highs, I'm going to activate this and put this a little bit lower. And again, that's okay. It's my preference. I'm going to duplicate and put one right above it. So again, we have a pretty large, you can consider this a loading zone for sure. But again, this is a good 6%. So again, it comes on a preference. But again, two very obvious supports. Scroll up and we can see that's a very obvious resistance and support. Scroll up a little bit higher. That's definitely one. And then of course, a little bit higher, we'll definitely have one more up here. That's definitely one right there. So again, really good supports and resistances. We can then take our trend line tool, come down here, and you can scroll over and see, well, does this work? Again, you only have 3 wick taps, once, twice, 3 times, and it cuts through this. So I don't see a good trend line at the bottom. I see channels, but I do not see a good trend line at the bottom. One could argue that you can take this one and definitely cut through stuff again. But again, even then, it's gappy, it's not good. It's not a great setup for that. But from the top here and down, as we can see, it makes almost a perfect descending triangle, right? You're getting lower highs across the board, and you have the same area down here. So again, how would you play this? I would just play it the same exact way as I do with my channel plays. I would just buy in, make myself a loading zone, probably right about there. I mean, I'd activate this, move it up. Anywhere in here, I'd want to catch that wick and this wick. Anywhere in this area, I would consider a good value. And I would just have to have a stop loss, right? Your stop loss could be below this action down here, or it can be a little bit tighter. It comes on to preference. We have a whole lesson about that. But again, you're going to have to play this like a horizontal channel and then just sell it quicker and quicker. So again, money can be made, but again, the lower highs are implying it's really, it's more bearish. Let's edit our studies. We'll add volume profile and see what it looks like. And again, what's this look like? That is, in fact, our lowercase b. We talked about that earlier. Lowercase b's are, in fact, bearish. And again, that's an obvious thing. But in the meantime, you do have this this D area, as always, right down here, looking to kind of be played off of and buy out of, right? You definitely have consolidation down here. So again, I wouldn't get too upset if this does drop down. It has a good chance of breaking out. But again, it doesn't look great for the setup overall. And again, we can then take our lower line, put it here. You can make this dotted, that's fine. You can serve two purposes. That's your volume line and your buy-in zone. That's totally cool if you want to do that. I'll take this line, activate it, move it down, make this double dashed as well. And again, you can always have 2 lines, have a double dash line, right below this one, and then this one's solid yellow again. But again, that's a totally fine strategy. Use both of them. I will add a second line here. Redraw left, redraw right, channel, right in the middle, make it look nice. Double click, dash lines, and red. So again, there we go. Edit that study, take it off. And so there you go. You know that your volume line down here is ready to go. It does wick down. As we can see, it has a bunch of wicks that should come back in. So again, you can wait for it if it does break. You can wait and hold it, or again, you can sell it and then rebuy in as it gets higher. But again, a very bearish setup. But again, you could buy in your loading zone, make 20%, buy in your loading zone, 17%, loading zone, 43%. So if you play it conservatively and have good charting, you can make money off of this. Let's check the next one. As we can see, CGen looks very, very similar. And again, as of recently, it broke down pretty hard. Let's do our supports and resistances. This is definitely one over here to the right. Extend left, duplicate. And again, you could probably put one down here now, given the recent price action, and it's, pretty relevant over there. Duplicate up. Looking good right about there. Duplicate up. Looking good right about here. And again, I could do more over here, but again, is it relevant? No, there's definitely one right over here. I could put one, right about here. But again, is it that relevant at the moment? Kinda, not really. So again, you can come up here and you can see across the board higher lows. And again, it has to be from the same exact move. And again, you can come over here and you'd be like, well, I guess it's maybe a declining wedge. Is it over here maybe? Right? There's no real clear area to buy off of. And again, given this action over here, it's definitely a descending triangle, right from here down, a descending triangle. So how would you play this? Again, there's no discernible buying area at the bottom here when it comes to a trend line. So you'd have to decide where your load-in zone is going to be. So take this line and you could be like, well, I guess I'll put it right about here. Right about here. Right? Make your loading zone whatever you want to make it. Make it gold as always so you can differentiate. And then you just buy in here. And then you can set your price, where you want to do. I could say my resistance is probably right about there. And so I could probably take my profits right about here. And again, it probably looks like it's small. But again, you buy in here and go up 10%. Come back down, go up 26%. Comes down, goes back up. So again, even in a more of a bearish setup, you can definitely make money inside of a descending triangle. It's just more risky. Have a stop loss. Next is a descending wedge. Now again, descending implies it's more bearish, which a descending wedge is. And again, you're playing for a breakout. I do not play this very often. I will on big cap stocks or if the stock is really setting itself up for success. But descending wedges, the big play are breakouts. Once that resistance gets broken on that trend line, you want to kind of go long. But again, is it the best setup? No, but if you do see these, you can chart them and try and play them. I'll show you some examples. So here's AZN, Azteca. Again, it's not really a great setup, so I'm not going to even do the supports for you. It doesn't take very long. Again, connect your resistances. From that same move, connect your support. I'm going to go with this move over here. Come to the side, and as you can see, if we connect all 5 of those once, twice, and again, it's not perfect. As we can see, it's a descending wedge. Now again, the good thing about descending wedges is that they do not last forever. There is a high chance this will eventually break out and go positive again. And again, you could have bought in at any one of these golden channels. As you can see, made 11%, could make 16%, whatever it is, you can make money on these, right? You can always make money on any kind of pattern. But again, your play is going to be waiting for this resistance to get a little bit lower, right? And then for your support, to be anywhere in this area. And then you want to wait for it to overtake your resistance, test it, and then take off. That's going to be your play for sure. And again, you can make money on descending wedges, playing for the breakout. But again, it's not the best setup. I'll show you one more. This is K, and again, Kellogg. You can, do the supports and resistances. Again, it's just an okay setup, so let's just do the trend lines. Again, connect all these peaks, and as we can see, you could probably do right about, get those 3 right about there. From the same move, they must all be connected, so here or here. I'll start over here and try, and again, connect all these. And as you can see, it's a good wedge. It's a good pattern. It's very clear. Again, you can make money on this for sure, but again, clear it up. But again, you're going against the market. It's going green right now. So why would you buy a dying stock in a living market? Not the best pick. But again, you can make money on it. More than anything, if you see this, stay away from it. Okay, especially in this market. But again, if it does break out, as you can see, it try to break out and dive back in. Right? So again, good setup at best, but we have better ones. So why waste your time? And lastly is a double bottom. These are, again, a little bit more popular on the micro scale. On the 180 day, you will see them, but again, they're not as popular or as formative because it takes a lot of price action to hit a certain price, go up, and then come back down to that certain price again. It's a rarity, but when you see it, it is very powerful, and I'll show you. So this is GOCO, G-O-C-O. As we can see, you can always draw a pattern out of this. There's not really a clear one if I'm drawing a pattern, but again, I want to find a double bottom. So again, if you're watching a stock trying to find some supports and resistances to play off of, again, you can come down here and see right there. You would have said, okay, it tapped, showed some life, came up and died. So you're still in a downtrend, you're still downtrending. Is it great yet? And then it comes down and taps it again. If anything, you see this, you would think, okay, we have a double bottom. It's coming down, tap, tap. Once it breaks above the most recent high, that's when you know it's probably going to be going long. So again, if it were to come back up to this strong resistance and die like it did over here, you'd be like, all right, I got to wait, right? Because a lot of patterns don't come to fruition until it breaks previous highs or previous lows. It's like what I said with trend lines. They must be reset when a strong support or resistance are broken. Once the pattern breaks above that strong resistance, you can now consider it an uptrend or a brand new play. So as we can see, we had a double bottom, it broke, you could have played it, made some money, made about 18% on that exact play, and again would have ran that bad boy up. So again, they're harder to find, and again, it's much more of like a launch pad kind of thing. Like you see double bottom, possibly go in. It's not as powerful as the triangles or a wedge, but again, if you see a double bottom, it's a great sign. And so we have G-Sky, our last one. Again, we can draw our supports and resistances. That's one, that's one, that's one. And again, you could do more up here, like that's probably one, but again, it's pretty far away. And again, you would have been watching this, and then over here, you would have seen tap, high, high, tap. So again, it came down, tapped it twice. Again, knowing that, we'll set our support a little bit higher. So again, it tapped down here. Look at that, trusty circle tool. Nope, okay. So again, you would have seen this and be like, all right, it tapped there, it tapped there. That's definitely a double bottom, looking good. It takes off, and as soon as it broke above this resistance, it resets that and goes higher. So I'm not as up on double bottoms on this time frame or wedge downs, but again, if you see them, they're great to play. But again, why would you play these? The double bottom is pretty hard to find, if I'm being honest with you, on this time frame, and the wedge down is a bearish setup. So again, you can play them, but again, why wouldn't you just play a bullish setup in a bullish market? Makes a lot more sense. So those are all the patterns for the day, all really pretty good. Again, the first 6 I shared are much better setups, especially in a green market. They make a lot more sense. Again, to properly plan for these, you must chart correctly the first time, right? You must put your supports and resistances, you must put your trend lines. Those trend lines must come from the same move, right? From the bottom, top, bottom, or a top, bottom, top, whatever it is, right? Whatever you draw first, you can then stem down and choose other points, right? It must be from the same exact move. Those trend lines will make patterns. These patterns are very powerful. Again, if you plan it accordingly, you draw your trend lines correctly, you have support set, you throw volume profile in just to check it out if you choose to use that. It gives you a much larger picture. So that's the overall plan. Supports, trend lines. These trend lines are going to lead you to a pattern. That pattern is either bullish or bearish. 9 out of 10 times you're trying to play a bullish setup in a bullish market. You identify a good loading zone, and then you go long, right? We have our ascending triangle, horizontal triangle, you're wedging up. Those are our 3 biggest ones, right? Ascending triangle, horizontal triangle, wedging up are definitely the best ones for you. A descending triangle is in the middle. You can make a lot of money, but again, you must have a stop loss. They are known to break. And then your bearish ones, wedge down. Again, it's okay. You can make some money, but it's a little bit more risky. I don't like it as much. And then double bottoms are by themselves. Again, they're just a launch pad kind of setup. Again, they're good to find, but on the 180-day chart, they're pretty hard to find, if I'm being honest. They're pretty hard. I mean, to think that a stock over 20 days will go from $1 metal round to $1 again, it's a rarity. But when you see it, I would definitely play it. And again, these patterns lead to reversals, breakouts, continuation. Whatever you want to get out of them, you want those 3 things to happen. We have a future lesson about holding and how to properly hold the stocks. If you're waiting for a lesson on breakouts, that is on the way. And again, with breakouts, the ascending triangle and a horizontal channel. And again, we talked about channels. These could be thrown in there, but again, we already talked about that. Why take more time? A horizontal channel and an ascending triangle have the best chance of a breakout. We're going to talk about breakouts when we talk about how to properly hold a stock and monitor a stock. That's coming up in a few lessons. That's it. Join us next time for lesson 14 about specializing. See you then.